Hello, ladies and gentlemen, and a warm welcome to today's webinar, which is brought to you by Shared Services Link in association with statement matching. Today, we're looking at statement matching, the AP automation story from Eli Lilly. My name is Susie West. I'm the founder and CEO at Shared Services Link, and I am very pleased to be introducing Diane Coey, who is P2P Global Process Owner at Eli Lilly and long-term member of Shared Services Link, and Daniel Kimpton, likewise. It's great to have Dan Kimpton, co-founder at Statement Matching, with us today.
Thank you, Susie. I'm really happy to be here with Dan today to talk a little bit about Eli Lilly, the company that I work for, and Dan's company, Statement Matching. I've been an employee at Eli Lilly for just a few months shy now of 40 years. Spent most of my time in finance. I'm located in Toronto and in Canada, and I've been in the GPO role for purchase to pay going on about 12 years now. So I wasn't at the very, very beginning of the standing up of the shared service centers. That work started, I believe, in 2009, and I would have come in shortly after in 2011 and have continued on that journey with our GBS organization to today. I'd like to talk about the GBS evolution that we've been through starting in 2009 and what we anticipate for the future. I'll talk more about actually our actual purchase to pay setup, specifically our invoice process, and how statement matching is one of the enablers that's giving us some controls and oversight that support our invoice process. And then we're going to go into a deep dive that Dan's going to take us through on the statement matching tool so that you can learn more about that. So a few facts about Eli Lilly. First, our purpose and our values. Our purpose is very simple. Lilly unites caring with discovery and to create medicines that make life better for people around the world. Our core values have been consistent for as long as I can remember. They focus on integrity, excellence, and respect for people, both within the walls of Eli Lilly and all of the interactions that we have outside of our organization with customers, healthcare professionals, patients, suppliers, and so on. Eli Lilly is 147 years old. We were founded in 1876 by Colonel Eli Lilly, who was a man who was committed to providing medicines to markets or to patients with a need. So very similar to our mission today. It has not changed a lot, and the core values have been consistent throughout Lilly's history. So we're headquartered in Indianapolis, Indiana. We have more than 39,000 employees globally. Approximately 9,400 of those employees are engaged in research and development, and we conduct clinical research studies in more than 55 countries. We have 7 research and development facilities around the globe, as well as manufacturing sites in 7 countries and expanding. We market our products in approximately 110 countries. We are supporting P2P operations in about 60, 70 countries around the world. First, a little bit about where we are and where the GBSs are located in the Lilly organization. We have 5 centers around the world. Our first center that we stood up would have been Cork in Ireland, and we have a Lilly captive center in India, Bangalore, that's primarily focused on IT, data, analytics, and so on. Primary focus or support would be our LRL, our Lilly Research Labs, and medical and clinical organizations, and some marketing. We have a shared service center in Indianapolis, Indiana, another in Mexico, and Kuala Lumpur. And I'm not going to go through the list of all of the scope and the span of all of these centers in this particular slide, but I think you can see that it does cover a pretty impressive scope globally. Purchase to pay, you will find in 3 of our 5 centers. So we operate primarily out of Cork, Kuala Lumpur, and Mexico City. And we're not, replicates of each other in each of these geographies, but the scope and the span of our work is very strategically placed into these centers that meet the needs of both the organization and the regions that they support or that they actually are physically located in. So for an example, if you think about our invoicing process in Cork, the Cork Center supports invoicing for language-dependent countries only outside of Europe, while our Kuala Lumpur Center supports all English-speaking countries across the globe, as well as the countries within their Asian region, whether or not it's English or local language dependencies. And then our Mexico City GBS would support invoicing for Mexico, Brazil, and all of the countries in our Latin America region. So our scope of work and our span of reach is very strategically placed into each of these 3 centers. Cork is the second. We set up a center in North America first, and then Cork would have followed in right on the journey in 2009. And they have become really our largest outside of the captive center in Bangalore. When we think of GBS business support, Cork is our primary flagship center. It's grown to house over 1,600 employees now, and we support 60 nationalities, 44 languages in the Cork Center, a lot of talented, wide span of skill sets across the organization, from accountants to doctors, nurses, managers, IT, robotics, and so on. Diversity is embedded in our culture and our mindset and seen as a capability that we offer in our solutions across the globe. So I'm going to start talking a little bit about the GBS evolution. And when I'm talking GBS, I'm talking the centers themselves and all of the different capabilities they support. So when we first started out in 2009, we were like everybody else. That I think the shared service center vision was one of a cost reduction enabler, and it was very focused on financial activities. So order to cash, general accounting, purchase to pay. And it was really a lift and shift of those operations from our 60 to 80 so affiliates into one of those 4 GBS centers that I described. It was where we started, and we have evolved quite a bit since then, as you would have seen in the list of the different capabilities that we're supporting. So the first couple of years, I'm not going to pretend they were easy years. I mean, the shared service centers structure was a mandated structure. So we were taking work out of many, many affiliates around the world and centralizing it and standardizing it in these centers. And there was a period of time where it was really important that we could demonstrate our capabilities to the affiliates and make sure that we had their trust in being able to manage their books and records and to take things forward into the future. So there was a few bumps along the way, but after a couple of years of keeping our heads down and seeing the results of a really highly motivated and talented workforce, we gained that trust. And in no time at all, other business units, when they had seen what we were able to accomplish, they started knocking at the door, bringing use cases to us and looking for ways that we could help them to reduce their costs and benefit from standardization and centralization and so on. And the key difference being that they weren't being mandated to send, to work with us to bring this work in, but it's something they realized the benefit in and wanted to be able to maximize as well. So as time progressed and we started taking in more scope over the years, we consciously made a decision that shifted us from a shared service center organization more to the global business solution centers that we are today. Wind forward to current year, and I think we're all very proud to say that what we've accomplished in the global business services organization is really looked upon by our most senior levels of management in the organization, our CEO, CFO, CPO, really see the global business centers more as a strategic enabler to further fuel growth that we're expecting to see in our organization in the coming years. So we're working with, healthcare professionals, patients, commercial, marketing, IDS, and so on. And we plan to grow that as we continue on this path out into the future. And we expect to see our operations grow in size as well. I'm going to drill down now into the purchase to pay setup and a little bit about the evolution of purchase to pay. As I said, we started out in 2009 really as a shared service center organization. We had an outsourced relationship with a BPO who did all of our transactional activities. So when the GBSs were set up, it was more to be that middle layer between our BPO and our affiliates, our finance teams, and to really manage that relationship both ways in terms of making sure all the transactions were posted and the reports were being issued and so on. And we were the place where all the escalations came into when that wasn't working as expected. So that's where we started. I'm going to go back a little bit here because I did forget to mention that in addition to setting up these shared service organizations, we also took on a very aggressive project to expand our single instance of SAP, which we had in our top 10 affiliates only back in 2009. And we wanted to expand that to our 80 plus affiliates as we were preparing to move them into the shared service organization so that we had one single instance of SAP and our BPO operated and supported all of the affiliates once we brought them live on SAP. Then we outsourced their work to our BPO as well. So moving forward a few years, the plan then was to take more control over our destiny, and we began developing a plan, I guess just before 2020, because we started talking about it in 2018, to insource all of the P2P activity from our BPO so that we could have more control over the design and be able to apply innovation, automation, and so on, and just have a little bit more control over our destiny, one might say. And we started the planning for that, I guess, in 2019. And if you could appreciate the fact that we moved into our COVID years immediately after that, we went through the insourcing process or transition completely remote. So we would have done our recruiting, our training, setting up, being ready to receive all the new activity coming in completely virtually over the 2 years before we started actually migrating the activities in 2021, just as we were starting to come out of that time. We work very closely with our business partners to ensure that, we wanted the best possible outcomes. Our vision was to be best in class purchase to pay capabilities. So our business case when we brought in the BPO was to bring in the activities at a 40% less headcount structure than what was being delivered by our BPO. And we delivered on that 40% reduction, and we're on track to reduce by another 10% just 2 years post the insourcing. Our on-time payments are maintaining, I guess, at industry standards around 91%. And our cost per invoice is just over $5, $5.21, which measures up to the industry benchmark of $4.99. So it's a journey. We're still working very hard on it, and one that we're sure that we're going to realize and meet our best-in-class aspirations in the very near future. There were many learnings along the way. This wasn't an easy lift and shift by any means, especially in a virtual environment. There was many pauses, course correction, reprioritization along the way, especially in the early months, as you can imagine. But we had very strong senior management support, a lot of perseverance by the team, a lot of flexibility with our new operations team, and we were able to maneuver our way through our first year end. I think we started insourcing around activities staggered between July and October, and then had complete ownership of the activities by October in 2021, and moved into our first year end 3 short months afterwards with a lot of focus and intensity in that first year. But happy to say as the years followed that this is becoming a much more standard process for us and very successful one. So I'm going to move right in now here to the invoice process at Lilly, talk a little bit about what we do and how we do it. So we are an end-to-end in-house P2P support. We process 850,000 invoices annually today, or 72% of those invoices are coming into us electronically through the Ariba Business Network, and 80% of that volume that comes in touchless. So our GBS centers are really focused on the 28% remaining, and that's the volume that we see as our opportunity going into the following years now to look at other automations and innovation that we can bring in to streamline that volume as well. As I mentioned earlier, we're on a single instance of SAP globally. Ariba is our S2P integrated procurement solution. So in recent years, we've just implemented Ariba sourcing, contracting, guided buying, invoicing with discount, and so on. AFI is our invoice pre-processor tool. So this is where we would receive all of our invoices, whether they're coming in electronically from Ariba or whether we scan them in manually. And within that tool, invoices would go through validation. We have escalation workflows in there for anything that we need to work prior to getting the transactions into SAP. So we have OCR, we have validation, and we have AP workflows that we use to manage the volume. Once everything is ready to post, then everything flows over either touchless and or manually posted into SAP, which is our single source of the truth at the end of the day. And I also wanted to mention we're also in the midst of everything else that we do. We're just finishing up a 4-year readiness plan to migrate from a global instance of SAP to a global instance of S/4HANA. Our go live is targeted for Q1 next year. So that's a little bit about the volume that we bring in today through invoice processing, or that we support today in invoice processing, and the tools that we support it in. And I think all of us could quickly say that invoice processing, I mean, it's very rules-based transactional activity, that is really relatively straightforward to do. It's when you get into all of the governance around that volume and how you manage that volume and the governance and the controls that surround it that really is what propels you to be more in line with the best in class that you aspire to. So well, the volume's important and it always takes the front seat, when it comes to month end and quarter stops and year ends and getting all the data through. Really understanding your volume and managing it and the governance around it is really what's going to drive you to first class. So we have several enablers that we have been working with for several years now, actually, at Lilly. I'm going to start with Apex Analytics. We use their First Strike preventative duplicate invoice application. We've been using that for about 10 years now. And what happens in there is on a daily basis, prior to any disbursement runs being executed at Lilly, we go through the outputs of that tool and make sure that everything that is flowing in for payment is only flowing in one time, and we're dispositioning any potential duplicates that may have been picked up in these runs. So we've seen some really great benefits from that tool over the years, and we'll keep that in our portfolio moving forward. PRGX is an AP recovery firm that we've also had a very long-standing relationship with over the years. And the idea there is they go out and do supplier statement audits with our supply base twice a year. And any recoveries that they find of missing invoices, credits, duplicates, anything they pick up is brought back to Lilly with a percentage of that finding being their fee as they identify and recoup those funds for Lilly. We also run RPA bots run our disbursements out of SAP. So we have schedules set up so that once the invoice has gone through our duplicate checks and the controls associated with invoice processing, and they become approved and available for payment, then we don't have processors going in and actually setting up those parameters or having any intervention on what's being picked up for those payment runs. So they're run daily on predefined schedules that span across the globe for each of the affiliates by RPA programs, which helps, again, increase the integrity of the record or the payments that are going out the door. We have a very, very strong compliance mindset in the GBS organizations. We have E&Y as our external auditors are in and on site with us almost 6 months out of the year as they review our processes, our controls, and so on, whether it be SOX operational or year-end audits and roll forwards. As I mentioned earlier, our on-time payments are running at about 91% right now. Our DPO, we have standard terms at Lilly on our contracted spend of net 60 right now. We're probably running in the mid 50 days to that, though we're pretty compliant with our terms and conditions. And I'm saving the best for last year. So more recently, we have engaged with statement matching. I guess it's been about 2 to 3 years, as we were very interested in their fully automated supplier statement matching technology. So when we insourced a very semi-manual process from our BPO, and we truly see the value in proactively reconciling supplier statements, we expect it to see drive up your on-time payments, reduce your duplicates, and so on. So we truly see the value in the exercise, but we did not want to throw an army of people at it, similar to what was happening with our BPO. So we were looking for a very automated solution that would meet our objectives. And the idea being too that the more that we could reconcile proactively in-house, the less that would be picked up by our AP recovery firm and subject to AP recovery costs as they were brought back to Lilly. So we started discussions with statement matching 2 years ago, and we implemented, I believe, in 2021. So let's dig in a little bit into the statement matching tool and how it's used at Eli Lilly. Direct invoice processing is typically a rules-based transactional activity, but trying to manage thousands of line items through a supplier's accounts can be much more complex, time-consuming, and labor-intensive, especially in the absence of technology. Often what we find too is that transactional activities take priority, typically at month end, at quarter stops, and year end. So again, the statement reconciliation task often gets pushed off to the side until some time can be freed up to reprioritize. Statement matching takes those challenges away from you because it's a fully automated tool that you send your statements over to, and it bounces up against the ERP data of your accounts payable data in your ERP system and matches as many transactions to statements as possible. So what you're left with is really what couldn't be matched, or what we call the unmatched volume. And that's where your AP department really focuses on primarily to address the unmatched items. So it very quickly tells you what invoices or credit notes are missing, where you might have made over or under payments, perhaps some currency errors in your keying of transactions. It can also identify even more complex problems that need to be worked through, where you've got multiple vendor accounts set up for one supplier and you need to do some cleanup on your master data. So it's a great tool for bringing that type of visibility to your AP team that can then proactively start working through the issues and working with suppliers to get the accounts up to date. So obviously the benefits we see at Lilly is the increased integrity of the accounts payable records, continuous learning opportunities for your AP analysts who are working directly with the suppliers and trying to get a more upfront auto match for future invoices, really protects the brand by allowing us to be more proactive on our suppliers' outstanding items versus sitting back and waiting for the suppliers to reach out to us. The missing credit report has been invaluable in terms of giving us line of sight of something that we don't always have, and allows us to bring funds back to the table to be reinvested into other areas of the business. It allows the AP analyst to really focus on the exceptions, and the automation is just time saving. The efficiencies and cost reductions all speak for themselves. So when we first implemented when we implemented the technology, before we actually deployed it with our AP department, the first thing we got line of sight of was the missing credits report, and we quickly could see that we had about $200,000 in missing credits, and we had our AP department focus on those and aggressively work with suppliers to bring that money back in, and they were quite successful in the effort. So before we even deployed the tool into operations, we had more or less got our return on investment in terms of the next few years licensing fees. So suppliers are really good about telling you when invoices are missing or payments haven't been made, not so quick to tell you about credits that they've issued that you haven't recorded. So from that aspect, the tool has just been invaluable. I just wanted to add on here, I'm going to go a little outside of supplier statement matching now, but at some point, quite accidentally earlier this year, we realized that statement matching also had a supplier's accounts invoice and payments inquiry portal that they were just building a new user interface for. And we just so happened at the time to be struggling with how to help our suppliers self-serve in countries where we were not using Ariba yet. For those of you familiar with Ariba, you know that suppliers can use their business network and see their invoices and payments and so on. But we've still got a scope of volume here that isn't going through Ariba, and we would like those suppliers to have the same ability to self-serve on their invoice inquiries and payment inquiries and so on. What was even more appetizing about this was there was no lift for us at the Lilly end, because we were already sending our accounts payable data over to statement matching and they had it there. So within weeks, we were validating our data in this inquiry portal and working with statement matching to develop a onboarding strategy for our suppliers. So suppliers can log into the portal, they can see what invoices have been received, which ones have been approved for payment, which ones have been paid. They can drill into the payment remittance advices associated with the payments, and they can actually update their own statements. They don't have to send them over to Eli Lilly for us to forward to the tool. The suppliers can upload their own statements and get a real-time readout of what transactions we have in our system as it relates to their statements, and take some proactive steps of their own to reach out to us. They can also email us directly from the tool. So if they find something odd on the account, they can just click an email button that sends a message over to us immediately. And at our end, it creates a case in our CRC tool, in our CSM tool, to be worked through the AP team. So that was something we weren't expecting this year, but came to us just at the perfect time when we were looking for something to address the gap that we had. And I'm hoping that we're going to have other synergies like that with statement matching as this relationship continues, as I'm beginning to realize that they've got many other services as part of their portfolio. And that's something that Dan, I'm sure, will be talking through in just a few minutes. So just a little bit about some of the stats that we're seeing in the tool itself. So we're sending over an average of 650 supplier statements a month, covering more than $25 billion in spend. If we look at just the last 1,000 or so statements that we have put through statement matching, we're seeing about 7,000 missing or unmatched line items over the scope of that volume, which works out to about an average of 7 documents per statement that our AP team needs to take some follow-up action on. It further categorizes everything else that's run through the system too. As you can see here, out of that, the last 1,000 statements, we're looking at 2,000 that have been matched and we don't have to do anything with, and they are in our systems as open for payment, and another 6,500, same thing, where they've been paid and the information is out there and there was no matching involved on the Lilly end with those supplier statements, and then less than 300 sitting there waiting for pending approval. As I talked about the credit notes, right now in the system we've got 1,300 missing credits covering a value of $46 million. The largest single credit sitting in the system right now pending action is for close to $100,000. Again, bringing that money back to the table to reinvest is key. But if you think about our AP recovery services too, if we can find these credits up front and we can action them, within the 6-month window before our data rolls over to the AP recovery team, we've just saved ourselves anywhere from 20 to 24% in recovery fees. So again, we're really feeling that the return on investment of this tool has been very positive. So I'm going to be passing over to Dan now, who's going to dig a little bit more into the tool itself and the statement matching organization and their products and services. We've really enjoyed working with Dan here at Lilly. We've got a very good open dialogue that goes on a regular basis. He's very good about taking the time to understand our structure and where he could help and where maybe his services aren't needed. So the conversations have been very candid. The team has been very responsive throughout both of the implementations we've done with them. And I also understand that they're looking right now to further automate their statement matching tool based on some of the feedback they're getting from their customers and that. So we're really excited to see about what's coming next and what more automation can bring to freeing up some resources at our end as well.
Hi everyone, I'm one of the co-founders of Statement Matching, and I'm going to give you a very quick overview, really just to show you what some of the screens look like and explain the core functionality. So we're obviously here to talk about statement matching, which is the application that Lilly are using, which is for doing automated supplier statement reconciliation. And then we've also got the portal extension to give suppliers access to their invoices online so that they can see the status of their invoices, statuses of their payments and so on. But statement matching is actually part of a platform, a bigger platform called AP matching. So AP matching also includes invoice matching, which is a service for doing automated invoice processing. So we basically provide an email address for our customers to send their invoices to. We also provide globally invoicing as well in compliance with all the mandates to get the invoices into the invoice matching app within 24 hours. And in there we do PO matching based on lots of rules. We do automation of non-PO, and you can also automate issue resolution as well. So you can automate like rejections if it's a duplicate, and you can automate workflows if it's missing goods receipt, that kind of thing. And then lastly, the one at the bottom is duplicate matching. So this is similar to what Lilly are using for duplicate prevention with their Apex analytics solution. But essentially this uses the same data set to give you duplicate identification reports, and we identify them at the earliest opportunity. So duplicate matching will basically give you a list of potential duplicates that hit your ERP system the previous day. And with your payment terms the way they are, and that gives you plenty of time to clear them down. So we've been doing this a long time, been doing it more than 20 years. All of these applications are all SaaS. They're all hosted on Azure. Customers get their own instance of the application. All the data is stored in the region where the customers are based. And really our whole kind of thing from when we started the business is the actual idea for this came from people in accounts payable, saying, well, you've done invoice automation for me. I've got a big problem with statements, too many people, not enough time. What are you going to do? And that's what actually drove us to develop statement matching. And that's how we continue to develop it today, by listening to what customers want, the actual people that use it. And we've got, this is an old slide, we've got, I don't know how many now, 120 plus customers globally. If you really boil it down, why we reconcile statements, what is the overarching objective? And the overarching objective is the CFO has to attest to the accuracy of your supplier liabilities. So the only way to truly check that your AP ledgers are accurate, which is what we're ultimately looking to do with supplier statements, is actually you've got to check your books, i.e. your AP ledger. You've got to compare that to your supplier's AR ledger. And that's the only way that you can truly stand behind your supplier liabilities. And then the knock-on of that is, why it's important to maintain accurate ledgers is, yes, supplier liabilities need to be accurate for attestation, but that also improves cash flow forecasting. You've got a more accurate picture for cash flow, and then obviously financial reporting as well. If you do that and you pay more suppliers on time and you do it correctly, then you're going to get fewer supplier queries, which is what we're all trying to reduce. And ultimately, it shows you're in control. You're actually being proactively telling suppliers, look, I've got a missing invoice here, please send it. So you're going to improve supplier relationships by paying them on time and correctly. And then from a P&L point of view, yes, there's lots of cost savings from an efficiency perspective. You can find missing credits, invoices and credits the wrong way around, all of that good stuff. But a big driver for lots of our customers that have cleared many millions of pounds or dollars back onto the P&L is actually to minimize your aged GR&I. Because if you've got a statement and it's fully matched, i.e. you've got all the invoices, and if you've got no invoices on the vendor's account that are open, that are dated before the last invoice date on the statement, if you've got any goods receipts that have not been invoiced for that supplier, then you could actually clear them down, and that goes straight back onto the profit line. And then of course, we're also stopping leakage. We're stopping payments of duplicates, and we're also identifying and resolving mispostings. And Diane used this word a number of times in her presentation, and it's something that we bang on about all the time. This is all about being proactive, because typically if you look at an AP department, it's very reactive. You've got documents coming in, you're having to process them, you're having to chase business users, you're having to deal with queries, you're trying to pay suppliers on time. And often statements get a back seat because it's just too time consuming. But if you're able to proactively reconcile high volumes of statements, and then you identify the errors and you resolve them on a timely basis, then again, we're back into our benefits. You're going to make sure that you've got all the documents, all the invoices and credits, your liabilities are accurate. We're going to highlight any data errors. So Diane mentioned, you've got one currency on the invoice, but you've got a different currency in your ERP system. Or that could be invoice numbers, invoice dates, and other errors that you want to resolve. And then again, it's about paying suppliers on time and correctly. And then the whole reducing aged GR&I as well is a direct impact on the bottom line. So I'll give you some overview of the system now. So we've got the mandatory logo slide. We've got lots of customers, lots of different sectors, lots of countries. They're all big customers that you'd probably be aware of. And then if we look at the solution, it's cloud-based. The way we get statements into the system is I basically give my customers an email address. Now suppliers will send you statements in whatever format they send you them in. It could be in Excel, could be in PDF, it could be in any layout. So my proposition is I basically give you an email address, you forward your statements to it, we extract the data from the statement, and then we send it into statement matching within 24 hours. Statement matching does the reconciliation, and then the only thing I'll touch on here, if you look on this right section, is it allocates a status, an overall one, to the statement, and then it allocates a status to each line. So fully matched means you've got all the invoices, and it also means you've got no invoices on the vendor's account that are not on the vendor's statement. So that's where you do your GR&I clearing. Fully matched with data mismatches. So that's where you've got all the invoices, but there are some errors. So I've got dates are different, invoice numbers are different, invoices and credits are the wrong way around. And then the last two are where you've either got invoices that are on the ledger unpaid, but they're not on the supplier's statement. So it could be a misposting or a duplicate. Or lastly, incomplete means that you've got invoices or credits that are on the statement, but they're not in your ERP system. Now, as a shared service center at Lilly, typically who does what statement is split, maybe by country, which is, company codes X, Y, and Z. And then you might have a split of suppliers within that as well. So I might be responsible for, suppliers that begin with A to F, for example. But you basically put your selections in and it returns the statements that you're interested in. And then if you hit search, it basically gives you a list of statements. You can see what the statuses are. You can sort them by statement date or value, whatever the user wants. And then if we look at an example, this is the kind of main screen. So on the left, what you're looking at there is the supplier's statement data. And then on the right-hand side is the data from your ERP system. So everything matches on this statement apart from one line, which is basically a missing credit. So what you would typically do as a user is you can either download the report and send it from your own email system, which is quite common, or you can email the supplier from statement matching. So the email from address would be, one of your email addresses so that it comes back to you. We've got the email addresses from the vendor master, and then you can put a message in and you can either send the full report, which shows what's matched and missing, or you can just send a copy of the report that shows the errors. So I'll show you one where we're basically showing everything. This is the report that you would send to the supplier. So it would have the Lilly logo up there if it was the Lilly one. And then you can see I'm basically request for the documents that are missing. I'm telling the supplier to please send a copy to this email address. And then I know the status of the documents. So I've got some that are ready to pay. I've got some that are in process, and I've got one that's paid. So you can see there's a paid date and a check-in number for the one that's paid, and I've got due dates for the ones that's not. So again, this is about trying to reduce supplier queries by, it's not just about requesting what's missing. You can add notes in the system. So let's say you add a note in the system to say, I've requested this credit from the supplier, and then next month you get another statement from the supplier and the credit's still missing. You can see the notes that you added previously, so it builds up an audit trail. This is an example where I've got data errors. Now I'm showing this one because it is quite common. You can see that the first line is an invoice for 105.78, but it's on the ERP system with an extra 1. The next one is a big problem. It's a credit on the statement. You put it on your system as an invoice, which is easily done. And then I've got some where the dates are different and so on. But you would basically fix these on your ERP system. We get the changes in the daily file, and these lines would all go matched. Or if you don't fix them, they'll obviously remain in error so that you fix them next time. Now, the supplier portal, which is what Lilly are using, this enables you to basically invite suppliers to have access to their invoice data online. So suppliers can basically log in. It's free of charge for suppliers as well. They can view the status of their invoices. They can see what's paid. They can see what's open. If they've got any big invoices they're looking for, they can search for them. They can view their payments as well. And if they click on a payment, it basically shows them the invoices that are in that payment. Optionally, because I think it's not a great idea, is to allow suppliers to submit messages against the documents on the portal. Those messages would go into your query mailbox. But my argument here would be, we're trying to reduce emails, not give suppliers another option to send them, but it's up to customers. And then if you can get them to do it, suppliers can even upload their own statements to reconcile their own account, which obviously you get a view on in your side as well. And suppliers can also submit invoices via the portal, but it's not on Ariba where they can do it electronically or PO Flip or anything like that. It's just they can send some invoices as an attachment. So it's very simple. This is what the portal looks like. So the supplier would land in here. This is like the landing page. And then if they want to go and look at their invoices, they might work out that the My Invoices tab will give them a list of invoices. So I can see the status, I can see the due dates. If any of them are paid, there would be a payment reference like a remit and a paid date in here as well. That blue icon on the left is where they can submit a message. And of course, the vendor is on the AR side, so they might want to reconcile this against their AR ledger, so they can export it to Excel and do an offline reconciliation if they wish. If they go and look at their payments, I can see I've got 5 payments, and then if I click one of the payment lines, it then tells me below what invoices are in the payments. This is very good for suppliers to make sure that they clear the correct invoices down on their sales ledger. And then if you get them to upload statements, they can basically upload an Excel, and they have to tell the supplier which column is the invoice date, the invoice number, the amount and the currency, and they can view the results immediately. So you're actually getting suppliers to reconcile their own accounts. So this is what the supplier sees. It's very similar to what you see on the accounts payable side, which I showed at the beginning. But you can also turn this off as well. Like the messaging, you can not allow them to submit messages. You can not allow them to submit statements. It's all configurable. Reporting, the one I'm going to just touch on is the critical supplier report. So Lilly, like a lot of my customers, have got a key list of suppliers that they want to reconcile every month. And as a manager, I want to make sure that I've received a statement from my supplier, my critical suppliers, and I want to make sure that they're set to complete by the end of the month to basically hit my objectives. And then I'll finish. I'd love to do a demo. If anyone wants a demo of this, spend a bit more time, I'm happy to do that. Ultimately, we also offer a proof of concept. We set up to 10 vendors. People do more if they want. You can basically give me data in Excel from your ERP system, give me your statements, we build a system, do a training session, which generally takes an hour, and then we agree follow-up calls to effectively, just give you all the support you need to make the POC a success before you actually commit. If you do commit, then commercials, we try and make this very, very easy for AP to get signed off. It's a 30-day rolling agreement, no minimum term, and there's a fixed monthly subscription, which is like a platform fee. So that's based on your annual invoice volumes, and then there is a variable monthly statement charge based on the number of statements that you upload and the format. And lastly, optionally, there is a supplier portal extension, which is charged at a proportion of the fixed monthly subscription. But again, I'm open on pricing, and we can cover pricing in any one-to-one calls that people want.
Dan, it's been great having you share your story. And Diane, just such a pleasure. Thanks so much for your time and attention today. See you soon. Cheers.